This video will teach you how to use the Ichimoku Clouds, which I have traded for many years and have made a 72% win ratio.
So you've probably seen it before. You open up a trading chart and bam, there's this wild web of lines and colorful clouds all over the place. That's the Ichimoku Cloud. And yeah, it can look seriously intimidating at first glance, but I promise you, by the end of this, you're not going to see chaos anymore, you're going to see clarity.
Okay, so I was explaining why I would never take this trade. Okay, so watch how the price goes. It's going in, no trade, because it hasn't hit the cloud yet. So now it's in the cloud. There's no trades because it's making a sine wave in the cloud, in and out, up and down. Now, I know earnings are coming up today. So I never trade before earnings. I don't want that risk, which I would have been correct because look what happened. The earnings were really bad, or they might have been bad, but people didn't want this after earnings. Okay, you see over here, it's not a trade because there's nothing to base the price movement on. All we have is this one way down here. Even though this is green, we have to wait maybe 5 or 6 days because there's nothing down here. So that's why I would not take this. Let's go to the next bearish possibility. Okay. Series, the radio stock.
Siri? Huh?
This is SIRI. It's a radio company.
I never heard about it.
It's a satellite radio.
Oh, sad.
But I'm going to show you why I would not, even it's coming up in the scan, I'll show you why I would not take this trade. This is, I would never trade this one, but what are earnings? You see, earnings are enough in advance, 2 months, so we're fine. But you see here, it's too choppy. It moves, yes, the scanner showed me it's coming below the cloud. It went in, it went below, but there's no trend. You don't see any movement up, any movement down. Watch, I'll show you a move by trend. There's no, and also the red is, I'm looking for shorts now. The red is below the blue, so that's not a trade. See, there's nothing to tell me to buy or sell. If you go back a few months, just as an example, here's a trend. It came out of the cloud and it started going down. Maybe this one here would have been a trade. This one where I'm moving the cursor. Let me see if I can get it. See, maybe here would have been a trade for a short. So just for example purposes, what day is that? September
20. September 25.
Okay. So I buy here. I would keep it here for short term. Let me take this off here so I can get a price. So say you take it over here. Remember this number.
29.42.
29.42, remember. So I would get out and this green cloud, if it's turned green on me and I'm here during the day, I would get out here. Because I see the green, it began here and it's coming up. So probably I would get out. I wasn't watching, I don't follow Siri, but just for example. See, I would get out, but look how much money that is. And then I'll show the options in there. 29, 57 to 25.
59.
So what is that, $4?
Something like
So if you had 100 shares, it's $400. Approximately, round number purposes. I won't trade this. There's no signals here. First of all, the red is below the blue. To me, that's not a trade. And people might say, well, you're not going to get every signal, but I'll find a few because there's 10,000 to choose from. So Siri is not one.
So let's jump in and demystify this thing together. So let's start with its full proper name, Ichimoku Kinko Hyo. Sounds pretty impressive, right? It was actually created way back in the 1930s by a Japanese journalist named Goichi Hosoda. And get this, he spent literally decades perfecting it before ever releasing it to the public. And that name, well, it tells you everything. It translates to One Look Equilibrium Chart. And that really is the entire philosophy behind it. The goal is to give a trader a complete snapshot of the market.
Let's look at Tiva is coming up on the scan. Okay, Tiva looks like one, almost, but I'll show you why I wouldn't trade this. Earnings probably were not good. This is an Israeli medical pharmacy company. I normally don't do medical stocks. But you see here why this might be a trade. Okay, so you see it's in the cloud, comes out of the cloud. For example, some people will see this big green bullish signals. I would say no, because I want confirmation the next day. It's always better to pay more for the stock or the option and have confirmation. I'd rather pay more with the feeling that I'm more correct. So here it looks like, oh wow, I should get in a big green candle. Well, look what happens, red, and it goes down into the cloud. It comes out of the cloud. I wouldn't trade this. This one, maybe. I would probably get in here thinking it's going to go up, right?
So in short, it packs all that critical info into one single comprehensive view. It's not just one little piece of the puzzle. It's designed to be the whole puzzle box. It's really an all-in-one system for reading the market.
You see here, I would not trade this one because it's on the first day green. And earnings is coming up. But you could have made a few dollars here. This, I could understand where someone would get in on this candle. This one right here. Because you see it was in the cloud, red, and then it turns green, confirmation green. Still green, it's green. If I were here and I know earnings are coming here, I get out, I would have made, I don't know, what, $50, $100 maybe?
So here's our game plan. We're going to deconstruct the cloud into its 5 main parts. Then we'll learn how to actually read the trend, find some trading signals, and of course, we'll wrap up with the limitations you've got to know. Let's get to it. All right, let's start by breaking this thing down. At its heart, the cloud is made up of just 5 core components. Once you get what each of these does, that whole complicated web of lines starts to make a whole lot of sense. Believe it or not, this is it. The entire Ichimoku system is built from just these 5 lines. Each one has a very specific job. You've got the Tenkan Sen and the Kijun Sen, then the 2 Senkou Spans, which actually form the cloud itself, and finally the Chikou Span.
So I would get out here because you know that earnings is coming up, the report's coming, and it was not good. Now I'd be watching this. You see here, red, green, I don't want this green to the far right. So if this goes down more, I might buy it. Because see the far right over here, I'm circling it, is green. If I'm looking for a short, I do not want the far right cloud to be green. I want it to be red.
Yeah.
This looks like a perfect entry because it's in the cloud, came out of the cloud, but this is green. And the olive is called, the lag line is perfect. But you know, you wait a day, you make more money. You make less money, but you have more possibility of making money, if that makes sense.
Yeah.
You're gonna pay more for the trade, but you have more possibility of being correct if you wait a few days for this to get green, to get red.
Well, it's just a little possibilities between
right, you see, but here it was,
to 20.
here it was red. This would have been a buy, but now it's green. It's not a buy. For a short, I'll do longs in a minute, but we have time, so it's not a problem. One more. I've traded this a lot, Valley. It's a Brazilian, I think it's energy. It's a Brazilian stock, but I've traded it a lot. I've made a lot of money on it.
Brazil,
in and out. It's the trades on the New York market, but it is a Brazilian stock. Okay. See way out here, it's a little red. So this is a yes. Okay, when are earnings? That's always I look for. I don't want to go more than, I want earnings to maybe 15 days in the future. So February is okay. Now this, I want to wait for confirmation. I do not like this wick or tail. It's a tail here. See, when you see this tail like this, let me get a marker. These tell me, this here tells me risk. So, but let me show you why I would trade it. Let me get this off. Oh, why I would wait, but I would trade this one, yes. Because look, yeah, the price action here, this would have been a good long, but it's a gap. I don't like gaps. I don't like to get in where it's jumpy. But just to show an example how to trade it. Okay, so it's going into the cloud. Now for a short,
This cloud is how many days from here to this? 1 month?
26.
26 days.
Okay, so it's coming down into the cloud. So it's not a trade. This one would have been a really fast money, but it's risky. You see how it, well, maybe not. I would have gotten out of here. This I would not trade. This would have been a loss. If I bought here and got out here, because it's red, I would have lost not much. You have to get out of the trade. When you get a losing one, get out really, really, really fast. Right, you're better. Right, a lot of people do is they say, it's $50. Okay, I'll wait. Maybe it'll come in my direction. I'm losing 20. It'll come in my direction. I'm losing 100. It might come back. What happens if it doesn't come back? Then it keeps going down. So if I wouldn't have taken say a $20 loss, $50 loss, if you get it in here, because my rules tell me it. Don't buy on the first day. See here, it hit the cloud and came up, but it's the first day. I want confirmation. Here's a yes. But this one is a no, get out. So you sell at a loss really quick. But if you have 30% losses and 70% wins, you're gonna make money. I have a 77% win ratio doing this. Okay, so you get
70%?
out 77. I
Oh.
counted the other day. I have the papers right here. I'll show you when we stop of all the how I calculate that. Okay, so this would have been a loss, but then, so what if it's a loss? You get back in when you can. So here, it's going down this out. It's not. There's no signal now because it didn't go into a cloud. So now it didn't go in because it skipped down. But here, look at this. It went in the cloud here. In the cloud here. This is green, so it's not a trade for a short. It jumped up, I don't know, maybe that was earnings. I don't know why it jumped up. But remember, it's Brazilian, so you're dealing with the change of the dollar. Okay, so here's a red one. Here's my first signal, but not today because it's the first day.
How you analyze one company? Because this thing that you just say, I wasn't thinking about it.
I do not like to trade stocks that have a big effect from the American dollar. Because I don't know enough about it. I don't know enough about how the dollar moves. I know it moves with oil and gold and foreign money, and I'm not well versed and I don't know enough about it, so I don't do it. I will not only go by the chart because you're dealing with, some people know about the money markets, the foreign, I don't know enough about it to take that risk. That's why I may have less trades, but I'm doing fairly well with it. I've almost doubled my money over a year. Not doubled my account, but doubled the money that I trade with.
Let's meet them one by one. First up, we have the Tenkan Sen, or the conversion line. Think of this as the fast lane. It's calculated over the last 9 periods, so it reacts super quickly to any price changes. It gives us our first clue that momentum might be shifting. Next, there's the Kijun Sen, or the baseline. And if the Tenkan Sen is the fast lane, this is the slow lane. It's calculated over 26 periods, so it moves more slowly, more deliberately. It really represents the market's medium-term trend. If the price is above this line, things are looking up. And when these two lines cross, well, that's a key signal, and we're going to get to that. Now, you might be thinking, hold on, aren't these just fancy moving averages? And that's a fair question, but there's a huge difference. See, moving averages use closing prices. Ichimoku uses the midpoint between the high and the low. But here's the real game changer. Moving averages are only backward looking. Ichimoku, well, it's designed to look forward. And this is the real magic of Ichimoku. The Senkou Spans A and B are the lines that create the Kumo, or the cloud itself. But here's the kicker. They're plotted 26 periods ahead of the current price. This is what makes the indicator so unique. It gives you a glimpse into the future, projecting these zones where support and resistance might pop up down the road. And the final piece of the puzzle is the Chikou Span, or the lagging span. And this one is beautifully simple. It's just today's closing price, but it's plotted 26 periods in the past. Now, why would we do that? It's all about context. It instantly lets you see if today's price is higher or lower than the price about a month ago. It's a really powerful tool for confirming the trend sentiment.
Okay. So you look over here, maybe tomorrow, Monday, rather.
Yeah, Tuesday.
No, Monday there's a market, but there's no bonds, but the stock market. So there'll be very, very, very little volume Monday, Veterans Day. So that's the one. Let's bring up another scan. You want to try a long one? One's for longs?
Yeah.
Okay, so let's bring up crossing over.
I'm more familiar with longs because.
Okay, so let's look at a long. The best one I get is when the price crosses the cloud. Here's the bullish itchy price crossing the cloud. Only one today, but I have a list from the other day, so let's use
the
list.
company
Yeah.
from TV.
Okay, so that's Roku. I need to write it down. There's only one. So let's show you what it looks like. See, now when you bring up the scan, you might not trade it that same day. You write it down, and maybe tomorrow, maybe the next day. It's a watch list. But it's a damn good scanner. It's really, really, really good live trading alerts. For some reason, it doesn't show when I bring it up when I share the screen on the videos. But okay, so here's how I would for sure trade this. Maybe tomorrow, maybe Tuesday, Wednesday. Can I see what color? This is red here, so I'm gonna wait, but I know it will come back red. I'll come back green. So this is for a long. Okay, so here's why I would not buy it today. But I will wait. It might become a trade in a few days. My prediction may be Wednesday next week. So here you are. The earnings came out. Whatever, people didn't like the earnings, it dropped. So here was earnings, what? 10:30. So not too long ago. 5 days ago. Today's 8th, so 8 days ago. It dropped down. It was red. So it's not a trade, it's in the cloud. So notice in the cloud, in the cloud, in the cloud. Some people would trade this, knowing it. When I took my classes in the cloud in Japan, they did teach us how to trade this, but it's more risky. But there are people who would have bought here because it's in the middle of the cloud. It went to the middle, so there's a good 70% chance it continues up. But I would not do it down here. You have no idea if it can, especially when it was red on earnings. So here's the rules again. It's in the cloud, in the cloud. You see the blue line is a conversion line, red line, baseline. But for a long, I want the blue above the red. In this case, the red is above the blue, so it's not a trade. The lag line is okay, it's pointing up. Let's bring up another scan. So that one, I'm gonna write this down maybe for next week. So cross, cloud, up is Roku, right?
Yeah.
Maybe in a week it might be a long trade. And then I'll show you the ones I picked earlier for today before 4. Let's look at a one you want to see bullish ones? Okay, so look at the 3-8 trap breakout, what comes up today. There's 17. I'll pick up ones I haven't. Let's just write some down. So 3, 8 breakout. BITX, BQT.
BITX.
Yeah, some of you will know.
Okay, so we've met all 5 components. Now let's start putting them together and actually read the trend. This is where that one-look promise really starts to shine. The most important relationship in this entire system is between the price and the cloud, and it's incredibly straightforward. If the price is above the cloud, you got a bullish trend. If the price is below the cloud, it's bearish. And if the price gets stuck inside the cloud, that tells you the market is probably directionless, just consolidating. Even the color of the future cloud gives us a heads up. Green for bullish, red for bearish. Now, here's another cool layer of insight: the thickness of the cloud itself. A thick cloud tells you there's been a lot of volatility, and that means it's a strong area of support or resistance. A thin cloud, on the other hand, means that level is a lot weaker and could be easier for the price to break through.
GME, I'm writing them all in the notebook. HPE I have for today, maybe. I have that on my list. HPE, I think it is. That's a good one. I might buy that today. IONQ, I've traded that before. I don't forget. KMI, I've done many, many times. I like to trade the same ones over and over and over again.
So those are for long, you say?
These are for long. So let's get the list and then I'll show you how to read the chart. PCG, Pacific Graphic Extortion, which is PG&E, the electric company in the West. Piton, I don't want. Riot, maybe. I don't want Piton because it's it's going up and they lose money every month. It's the financials are terrible. It's one that's highly risky. Riot, let's see.
I'm not familiar with none of them.
You know, okay. SoFi, SYM.
SoFi is media? SoFi is media company? No.
SoFi is a financial company.
All right, enough theory. How do we actually use this to trade? Let's put all the pieces together and see what a clear trade signal actually looks like. So here's a classic setup for a strong bullish signal. First, you confirm the uptrend. That means the price is clearly above the cloud. Second, you wait for that bullish crossover, where our fast line, the Tenkan Sen, crosses above the slower Kijun Sen. Third, for confirmation, you glance back at the lagging span and make sure it's also above the price from 26 periods ago. And finally, the cloud itself becomes your best friend for managing risk, acting as a dynamic support level. And, as you've probably guessed, a strong bearish signal is just the mere opposite. You're looking for the price to be below the cloud, for the Tenkan Sen to cross below the Kijun Sen, and for that lagging span to confirm the whole thing. Simple as that.
TSLL is already too high. That's Tesla. That's the tracker of Tesla. It's already too high for me. But and ZI I've been looking at before. These are breakouts. It's called a 3/8 chop. I'll show you that another time. So let's take them as we go. There's plenty to look at. Why I would trade or not trade these. Okay. This one just doesn't look or feel right. When you do it so many hundreds of times, you just look and you get, and I can go through.
Why he say no, why he say yes, I'm like, what?
But I can go through, but I'll go through each one with you. Why?
Yeah.
Okay, here's why I would not do this yet. Okay. So this passes. The green to the right passes. That's a yes. It crossed over the cloud. That's a yes. The blue is above the red line. The baseline is under the conversion, so that's passes. This olive line is in the cloud. I prefer it to be above the cloud for a long. The other reason why I would not is I just look at the chart and it doesn't give me a good feeling, and You see this line here is 500-day moving average. If it goes above it, yes, but usually it goes down, and it's testing this. See this line here?
Mm-hmm. What that line means?
It's a 500-day, over 500 days, the price average of 500 days.
Oh, okay, because I had been mentioned.
But many times it'll hit that as a wall, as a ceiling, and come down. And I don't like the feeling of it. It just looks choppy and it doesn't feel right, how it bounces all over the place. But it came up on the scan only because it was in it's called a 3-8, it's a trap from a 3-day to an 8-day. I could send you videos on that from other people.
But of course, no indicator is a magic crystal ball. And to use Ichimoku effectively, you absolutely have to understand its limitations and see the full picture. First thing to remember is that Ichimoku is a trend-following tool. So when the market is just chopping sideways with no clear trend, it's not going to be very reliable. And like any indicator using past data, it can lag a bit in really fast-moving markets. That's why a lot of traders will pair it with something like an RSI to get a second opinion and help avoid those false signals. You know, that commitment to getting it right really says something about the creator. Even though Goichi Hosoda developed the main ideas in the 1930s, he spent over 30 years testing and refining it before he finally released it to the public in 1969. Talk about dedication, right? And that brings us right back to where we started, the core idea, getting a massive amount of information in a single look. Ultimately, the goal here isn't just to look at a bunch of lines on a chart. It's to see the complete story that they're telling together, the story of the market's equilibrium. It's about understanding the market's balance or its imbalance so you can make smarter decisions. And that leaves us with one last really important question. The Ichimoku Cloud gives us this incredible, multi-dimensional view of the market, for sure. But in the complex markets we have today, can one indicator, no matter how great it is, ever truly be enough? And that is a question every single trader has to answer for themselves.
EQT I watch all the time. See, now this one is one to watch, but it's too high. Okay, so this one cleared the trap, but I'll show you why I would not do this one. It is, if you're going to keep this a long time or something, maybe. But you see the red line here, it's green, this passes. But you see the blue and green line are in the same place. But look at the big difference in space from the lines. I want it bouncing off of the lines or very close to it. Okay, you see the red is the baseline. I'm circling it here. Okay, what? Let me get a. Do I have it? Okay. You see here, the blue and the red, they're in the same place. That's neither good nor bad.
But that was 2 days ago now.
You see this line? Okay. I'm certain, here it is. But look at how big of a difference this is. 41 down to 38. So what percent is that? So it looks like it's a big difference. I want it coming off of the line here. Because it's already very high. It can, and of course it can go higher. But I want it near the trend. This tells me there's a trend. I want it very close to how it's moving up. So I would put this on the list. And it's possible that it will go, it'll start doing this. Maybe. And maybe this line will start doing this. And then I buy it if it's close. But it's not, it's too far. You see why?
Yeah.
The blue and red line pass. This pass, but look at this line here. Let me get this. I'm going to say the title in German. Okay, so look over here. You see the lag line, 26. This was the price 26 days ago. Look at, it's like a jet trying to go straight up. So it's not a good risk. And of course, people can buy it and make a lot of money, but I'd rather make less money and have more security and sleep at night.
Yeah, that's the most important.
Okay.
Be able to sleep.
Let's look at Geo. What was that one? 314 plenty. This one again, this is another one that's too high. So I won't even go into it. You see here, it's just way up there compared to this line.
Yeah.
You see the conversion line and the,
It's almost the,
but look how high this is in comparison. Even though all the other rules pass. GME I don't like. It's the one that 2 or 3 years ago where it moves crazy for no reason. But just for the fun, this may be buyable. I'd want it to start waving more before I buy it. So this one, look, it's in the cloud, in the cloud, in the cloud, comes out of the cloud, not a buy. Yesterday would have been a buy, I just didn't see it. You see the green here? It came out of the cloud up, and it's red, not a buy. But it did come out of the cloud up. Right over here where I'm moving the cursor. So yesterday would have been a buy. And look at today. Probably I would suck.
How many dollars?
So look at the
yesterday
difference
was
from
23.13
23.13
to 24.79.
to 20. So what is that? Dollars round numbers. $1.80, $1.70 or something. So in 100 shares on a day, 100 figure round number purposes.
Yeah.
On easy numbers, 150 without taking the time with the calculator.
So for you, it's to like start.
Yeah, I don't follow the stocks that move strange, but it did come up on the scanner. HPE is one I might do today. I think it was one. This is one no, I'm gonna wait. But it's one to watch. You see here, this line here is a 100-day bar. It crossed it. So look over here. Why I would trade this? Because of the cloud, but so here it went in the cloud, came out of the cloud, it has stayed out of the cloud. So that's fine. It went. I would not be trading it around here. Why I would trade this? I want to wait a few days. But you see here, it's green, it came up, but it's right at this 100-day bar, at this blue line.
I have one question that I don't understand. Those points, what that means?
These here, you mean the blue and the red?
No, those points.
Oh, that's a signal, that's a signal from E-Trade. I can take those off.
Oh, okay.
That's the green is a buy. Let's see if it comes in. That just is something that I had on where they give me the signals, price moving across. These dots here, I think this one, technical insights, I can take that off. But the technical insights, I keep it on because I want these two lines here. Those are the only ones I look at. So this one I would wait. I have it on my list, Hewlett-Packard. If this moves up and comes up, because it could, I want it closer to the blue and the red. So hopefully it'll either move flat and this comes to it. I want it close to the conversion and the baseline. ILNQ is a wild one, but I have traded it. See, this is too wild to trade. But look at all the people that got in at earnings. This is just, you see how it's crazy wild? How it goes up, that's like an airplane trying to go straight up in the air. It can also come straight down.
Yeah.
So that one I would not do at all.
Wow.
I would leave it.
17 to 24.
It's a lot of, that's a risky one, a real volatile one. KMI, if I remember, is not. Okay, so this one I missed. I should have bought it because I trade it all the time, I know it. This one may be a buy here. Not too far from the blue line. But I'll show you why I would buy it. Because I've traded this in and out many times. I think mostly I make money on KMI. But I do want
KMI.
KMI is a Kinder Morgan, very famous. Is a oil. First, I would trade it because I think they're going to go up with Trump going in the White House. All of the oil stocks.
Yeah.
I might even buy this today because they're cheap options. This one I might do today before 4 because it's following. It broke out of a 3/8 trap, but look at the blue line. And I didn't trade it here. I should have bought it 2 days ago. But see this here where it didn't move? This doji here? Same price. This is, you wait for that. And if it continues above or below that, that's the direction you trade it, doji. This one here. This little price movement yesterday. Do you see it? But it continued up, so most probably it continues. I might do the KMI only because I'm fairly confident in the KMI because I traded it so many times.
I hope you enjoyed this video and learned something. And the next video will be on the consciousness of money and how the amount of money you have has nothing to do with what you do for a living. It has to do with your consciousness of money.